65 offers for one home. I'm Eric Peterson, owner of Kopa Real Estate, and in this video we're going to talk about how to get 65 offers on your home, the most recent real estate statistics for Cedar Park, Texas, rising interest rates, and what that means for you as a buyer or a seller of Cedar Park real estate. Now first, let's review the most recent real estate statistics for January 2022 for Cedar Park real estate market. 56 homes were sold in Cedar Park in January 2022, which was down 9.7% from January 2021. Average dollars per square foot was up 39% to $253.34. Average price increased 34.7% to $570,381, and the median price was up to $543,000, a 34.4% increase, showing the market shifted all the way up $138,948. The lowest priced home sold was a condo in Cypress Creek Townhomes for $370,000, and the lowest priced single family home sold was for $379,000 in Cedar Park Town Center. So the highest priced home sold was a new construction home in the overlook at Ranch at Brushy Creek for $1.26 million, and that was the only home sold over $1 million in January. Smallest home sold was in Park Place at 1,269 square feet, and the largest home sold was in Twin Creeks at 4,020 square feet. Home that sold at the lowest price per square foot was in Buttercup Creek at $173.04, and the home that sold at the highest price per square foot was that home in Park Place. On average, a home sold for 3% over asking price, with only 7 days on the market before going under contract. And as of February 1st, 2022, there were only 17 active homes for sale and 133 homes under contract. So the highest price sale in January 2021 was $717,000, but this year there were 7 sales over that price. And in 2021, there were 46 sales under $500,000 in January, but this year there were only 24 sales under $500,000. It's hard to imagine the housing market accelerating because it was already red hot, but that's what's happening. So would you believe there were 65 offers on a home in the area in January? So this home was listed for $750,000. And it's just hard to imagine there are 65 buyers for a home priced at $750,000 in the area. It's interesting to look at the breakdown in offers for a home with this much activity. So out of the 65 offers, there were 5 offers between $750,000 and $799,000, 22 offers between $800,000 and $850,000, 23 offers between $851,000 and $899,000. There are 10 offers between $900,000 and $950,000, and then 5 offers that were $951,000 and up. So let's talk about how you get 65 offers for your home. So the most important thing is you list a home that should have been listed for $925,000 for $750,000. So that's right, this home was significantly underpriced. And maybe that was a mistake, or maybe it was a great strategy because in the end they got a good result. Although it sure wasted a lot of time for a lot of buyers and a lot of agents. Next, you want to have something special about the home. So this home's a large single-story home with 4 bedrooms on over a quarter-acre lot, facing a preferred direction for many of the buyers in our area, along with a 3-car garage and zoned for great schools. So this is the type of home that would qualify for what I call aspirational pricing. And this is where there are so many attractive features of a home, it will sell for higher than each individual feature added together would indicate. So there is somewhat of a multiplier factor that happens because it's hard for a buyer to find another home with all of these same features. It might be easy to find a home with 2 of them, but not all of these features. So how does that affect you as a seller? Well, the most important thing it tells me is the buyer demand is high, and you'd be foolish to sell your home off market in this environment. You should also manage your expectations that this is a unique situation with an underpriced home. So if your home is in poor condition or overpriced, you may still get a lot of offers, but you won't get 65 offers. If you're in a buyer, this is a great example of the market value of a listing having nothing to do with the list price. And buyers will often ask me how much they'll have to pay over asking price. And the right answer for that question is it depends. So in this case, it was over $200,000. But in some cases, it could just be list price. And there really isn't any absolute rule of thumb. So next, many real estate brokers will tell you that they always get offers accepted every single time. Of course, unless they're one for one, they're not telling you the truth. So the truth is I've had hundreds of offers not get accepted. We had clients that made an offer for this home. And although the offer for our clients was very competitive, sadly, it was not accepted for this house. And in this market, you have to have the memory of a baseball pitcher who just gave up a home run and get right back in the game. So we had to dust ourselves off, learn from what happened, and we got our clients under contract the next week on an even better home for them. So now let's look at interest rates. Expectations for this year were rates would increase to 3.7% by the end of the year. But this morning, I received an interest rate update that rates are already at 4%. So Ivy Zellman, who's a respected housing industry analyst who was ahead of the curve in the 2008 housing crash, says the acceleration in the market is due to buyers that were on the fence having FOMO about interest rates going up more than they have. And Ms. Zellman says that this fence-sitting flurry of activity usually lasts 3 months, and then we could see a significant slowdown in the market. She also believes we're overbuilding, and once the supply chain issues are resolved, there will be a backlog of new homes coming on the market. In a recent interview, Ms. Zellman said the backlog will be like winter is coming. So we'll have to wait and see. Of course, interest rates increasing will affect payments, but that doesn't mean prices will come down. It may just slow the rate of increase or cause a little inventory to build. And none of that will be a disaster, but for home sellers who are sitting on the fence, it might mean you'll be selling later in the year with more competition and buyers who are less motivated. To gauge buyer demand, the leading indicator we want to watch is the weekly purchase loan activity, not the overall activity that also takes into account refinance activity, but only purchase loans. Now, if we see a significant drop in mortgage applications that go on week after week, that may be the canary in the coal mine that tells us the real estate market will be softer later this year. What's our recommendation? Our recommendation for anyone planning to sell in the next 3 to 4 months is that you should contact us today so we have you on our radar in case we recommend to our sellers to get on the market earlier than initially planned. And what's the bottom line? Well, if you're thinking about selling your house this year, now is the optimal time to list it. Let's connect to discuss how you can put your house on the market today when there's still less competition. When you're ready, please contact us by phone, text at 512-791-7473. Or if you like, you can choose from our availability at copaseller.com. Thanks for watching and make it a great day.